The S&P 500, the Nasdaq 100, we had some big news on the day. And then, of course, last night, what happened? You remember. The credit rating got shifted and changed. It was a pretty big plot twist. And we've seen some of the pain subside into today. But now, again, we're getting a very familiar action or test on the charts, which we'll be covering. Now, the biggest things I want to talk about is a little bit about Jamie Dimon and what he says, CEO JP Morgan Chase, and what his opinion on the market and what's happened here. I would like to add, Jamie has been a big advocate for them and understanding that they will continue to raise rates and that cuts won't be, coming in this year, right? He's been very realistic about the market. So I like to attack and give visuals from the most realistic perspectives here in the market. Okay. Now, also, too, though, we need to talk a little bit about what's happening across the board. We had some nice pullbacks, but I do believe tomorrow is the day of all days. It is the primo de primo, if you will. So getting into this, Jamie Dimon had a few things to say. It doesn't matter that much talking about Fitch giving this rating. It's the markets that decide, not the rating agency that makes the big decisions regarding the market and equities. When you scroll down a little bit further, and he had a few more comments that went into this, but his basic statement was, this is the most prosperous nation on the planet. It's still the most prosperous nation on the planet, right? Okay. Now, going into this and what he was talking about, he's basically saying, how can you have other countries that are rated AAA, but not have the United States rated as a AAA? Because a lot of these countries are running off of US currency, our market, etc., right? So it's almost not logical that the core country, that all these other countries that are still rated AAA have a higher rating than the country that basically backs them. It's like a catch-22. It's like a building block. It's like a Jenga tower, right? You can't, you expect the top to start wobbling before you expect the bottom to start wobbling. Okay. Just saying, doesn't make too much sense. You go, leave it for what it is. Now, going heavily into the charts again, there's not too much fundamental things I need to cover today. I'm going to tell you that right now. Tomorrow is the big day. Okay. Tomorrow is, again, primo de primo. You got to be paying close attention. We have a lot to talk about tomorrow with Apple and Amazon earnings, very big. But as we look at where we're at and kind of where we came down into, these are levels we mentioned yesterday, okay? We had these same levels marked out. We had the demand zone coming down. This is a 2-hour, I think it's like a daily demand as well down here, coming right into around the 45.40, 45.25 range, okay? And you're finding support right at this level. After this, you have a little bit more of support coming down under 4,500, but then it gets kind of more interesting. But, in my opinion, I wouldn't be shocked if we test 4,500 flat. Because, again, this is the previous high, and this had not been tested. Okay, that's number one. Now, going into Nasdaq. Nasdaq, you came right back into previous highs, and you actually ended up breaking and holding below here on the day. Not beautiful. Not beautiful, okay? Not the best thing. But when you look at Qs, again, it's kind of very similar behavior to what we've seen. Qs, right? You didn't get the exact touch on the previous move, but on Nasdaq, but on Qs you did. You came right into that level, you bounced up. If you're following me on Twitter, you already all saw this. And then you're getting that move today, you're bouncing from that level, trying to hold, okay? So again, decent action, you're getting support, you're finding support. But again, it's all setting up, in my opinion, for tomorrow. If Apple and Amazon come out bad, I think it could be a little bit more pain for the next few days. Personal opinion. Okay, I'm going to tell you that right now. Right? Now, before we go any further, I have to ask you to consider liking and subscribing. It helps out tons. Every single day I post videos for you so you are prepared. The Discord link is also down below if you want to check us out. The link somewhere down there below. If you're a beginning trader, I don't think it might be for you. I would probably wait. Go to our website. Go to education. Look at our free course and all the free lessons in there. Start understanding first. Don't just jump in and start paying someone and expecting yourself to just start printing money. That's not going to happen. I will say this right now. Discord, especially ours, requires work. You have to take it for what you put in is what you're going to get out. So that's what we're looking at there. Also, too, right now, you need to be following on Twitter. If you don't know, Twitter, X, whatever you want to call it, I don't really care, to be honest. We do a Twitter space every single day, Monday through Friday, going over the videos that we just covered here and hopefully giving you guys answers and, having a little bit of discussion back and forth and other charts that look good. So make sure you're following on Twitter. Again, about 30 minutes after this video is published, we'll be on there. So again, this is what we're looking at. Now let's keep it pretty simple. I want to go through RTY and a few of the others. Now, as of recently, when we've seen a dip on Nasdaq or ES, we've seen RTY and Dow get most of the love. The story's a little bit different today, right? Still trending down here. Now, what I will say here about RTY that's very interesting, if we come in here and you can actually see, you're clearly finding support at those previous highs, okay? That's where you're at. Now, you go again to the daily chart, you zoom out, and again, you're finding resistance at the same overall level, like 2000 into 2030, right? Now, we all agree if Russell can break over this, you have a lot of momentum and room, and we'll start seeing fireworks start to pop off. But these are kind of the areas that I'm looking forward to right now. Now, going also into the Dow, we saw some Dow names perform decent in the beginning of the day, and then we saw them start to sell off shortly after, right? Beginning of the day, kind of pushing up, and then just down, right? Just down, down, down. 8 a.m. right here. Again, we're popping up 6, 7, 8 a.m., pop down then. Sorry, and we're kind of ending at support as well. Again, you're noticing most things are coming into support. Dow, ES, Nasdaq, kind of all the above, right? That's where we're at. Now, again, looking at some of these equities as well, and you're going to notice a going theme here when I kind of just do this rundown. You're just coming into supports here on almost everything. Apple had a great action where it was, but even I can't deny that you drop down, you're sitting on support now, right? It goes on and on and on. Google, very similar, coming into support. You do have a nasty daily gap down to the downside at 123. AMD gave up everything that it had yesterday. And again, like I said on AMD, you had to get above 122. If you go to the after-hour chart here from yesterday, look at that rejection at 122 here on the 2-hour. Okay, and they had another wick here in the pre-market as well. Very ugly. So again, these are things that I was just watching and paying attention to. NVIDIA, again, coming back into 440, trying to hold here in the after hours, about 441. So you're trying to hold all these levels. AVGO, 889, bouncing once again at that level. So again, what is the combination? What am I saying here? Now, what I'm saying here is you're getting a pullback. I am acknowledging that. Bears have an opportunity right now that I think we haven't seen this opportunity step up in a while. So this is definitely a decision time that we need to be paying attention to. I have said the word opportunity a lot more in the past, but this is definitely a time that we need to be paying very close attention to. Because again, going into tomorrow, I think you may be getting a buying opportunity. But for myself, let me just give you really, really clear what I'm doing, like how I'm attacking this. Any position I have, which I'm not heavy into anything yet, I have Tesla and Apple primarily. That's my main position, right? And those are, Apple is like 4 months out, and then Apple's December, so however many months that is from now. And then Tesla is for 2025. That's just a really big leap. So I haven't started really dumping back into the market, right? Previous levels when we bounced up, I had a lot of opportunity. I saw it, I took advantage, right? So right now, I'm very much so just kind of sitting and waiting to strike, right? I don't want to get in too early. I don't want to be I grabbed the knife, I caught the bottom. That's not my strategy here. Our strategy is survival. It's consistency. It's, making sure it pays off and we understand what worked and how we can kind of, mimic the success in the future as well. And so what I'm doing here is exactly that. I'm patiently waiting. I want to see, one, if Apple and Amazon report, are buyers going to step in hard? How are we going to react from this? I do personally believe this is an overreaction. Going to tell you right now, people may disagree. Based on earnings, based on everything that's happening, I do believe that. I do still believe the long-term bad news that could come out is going to be primarily around oil or energy and affecting inflation, but that's not for weeks. So that's not a concern for me just yet. I also believe there's a high possibility we're going to pause on rates at the next meeting. Going to tell you that right now as well. These are just all things that I believe, and they don't factor into me thinking that the Fitch rating is going to hold up, personally. And another thing I want to factor in is if Fitch upgrades that anytime over the next 6-7 months, you're going to notice an immediate buying on the market as well. So I'm not super bearish on the downgrade. I think that this is something that we might be able to just blow past sooner than later. And I know, some of you might be like, Tyler, you're crazy. You're a permabull. I'm not. I'm not. If I was permabull, I'd be just YOLOing calls as we speak, right? It'd be a lot cooler if I made a quick $30,000 and flex on everyone and said, everyone join my Discord. But I'm not doing that. I'm trying to practice what I preach to you guys. Okay, so understand that. And I'll have more charts and stuff coming on Twitter because there's a lot of plays that are looking really good. And I want to get back to those. Okay, so just a few names that I'm really liking here. And I also do want to go over really quick with TradingView and going over a few things here. So actually, let me do this first. So what we're going to do is go over some of the fundamental things I'm looking at here. TradingView primarily, I'm always looking at DXY. And here on DXY, I think there's a high chance you're coming back into this range right here, and you're going to touch that trend line. It would just make logical sense for me. So you have a little bit more room to go there, and we need to see the way the dollar will react, but we have time until then. So again, kind of taking that slow. A little bit further as well as we look, yields are kind of stagnating at these highs, which I do believe if the Apple and Amazon earnings come out bad, I think yields continue to rise up personally, because the markets will be hammered to the downside in my opinion. But I also want to be tracking this as well. And yesterday's video, I mentioned oil. Go watch the video if you need to. Okay, this is the resistance we talked about. 81.5 into like 84. You're coming right back into it, instant rejection. Now I want to say this. You're also going to probably be testing the 200 daily MA very soon, the yellow line right here. So the reaction of this level will be very key. If you lose it and break back down, it's most likely just a trap to the upside. If you break and push back up, it's very bullish. So far, if you look at what's happening with OPEC and production on oil, I mean, this is a legitimate reason for oil to be spiking. So it's not a surprise in what's happening here from a fundamental standpoint. So I just want to make that really clear. And if oil continues to move up, I do think this is a catalyst for downside potential based on inflation data and the longer scheme of things, right? Maybe like not this month's PPI and CPI, but the month after. Oil is going to slowly start to affect prices and really affect inflation. And it's ultimately what happened last year that caused all that pain. Because you look last year when, CPI started really cooling off, it was, right after the June and oil started just tanking, right? That's when it started happening, is because you saw oil top out and then boom, get basically shot down to the trenches. And then if you've been watching the videos for the past 2 months, we've been grinding on the 200-day SMA on the weekly. Okay, so understand that. So going a little bit further as well, you're also seeing what's happening here with gold. And again, I think gold is really interesting for me. So if I was I'd be more concerned with the market as well. And again, this is things you have to be considering based on earnings and things that haven't came out yet with Apple and Amazon. So I have to keep going back to that, because I have to be able to acknowledge what could go wrong with this trade. Now, if we look here, this is a daily chart going back to 2020, a 1, 2, 3 top here on gold. And then as well as right now, you're kind of making a complex head and shoulders, which I'm not a huge fan of head and shoulders, much less complex ones. But you still have to acknowledge how this is playing out. Okay, it's not pretty. So, and even on this downside movement you're seeing on the market, you're still seeing gold get hit. So definitely interesting behavior as we're targeting and looking at what's happening here in the market. So we got to keep a really close eye on this. But if gold was rising also, I'd be more on the fence of downside likely on the market, or people positioning or hedging themselves out of it. But it's not. So another thing we have to look at. Last thing I want to look at is VIX. VIX, you definitely are spiking here. But I want to say right now, last year, where was that level we always talked about? Where did we start getting concerned with downside volatility? It was when VIX got up to 24. You're at 16. You're slowly working your way up. I will say that. But what happened back here, July 6th, when you hit, $16, $15 range? You got rejected and you pushed down. Just saying. So again, VIX pushing up like this is interesting, but it's not a clear-cut sign that downside has to follow. That's again why I continue to say, watch and wait to see how the market reacts to this information and the key levels. Because again, it's worked time and time again. I hope I don't sound like a crazy person, and I hope what I'm saying is kind of like getting back to you and you're able to understand what I'm saying. Because I feel like as of recently, some of the comments and stuff, I'm just like, I don't know where I'm going wrong with like communicating, especially with like what I'm doing and how I'm trying to attack this market specifically. So that's what I'm looking at. Now, quickly going through a few names, few stocks. Few names that have my attention. Microsoft is grabbing my attention immediately. You go here to like the 2 hour, 4 hour. You have a demand here on the 4 hour and I believe the daily right here at around 325 into like 323 roughly. Massive level. I want to see this hold very big. You do have a daily gap down here, but I'm watching this right now. You've bounced 1, 2, 3, 4, almost 5. This will be your 5th time, but 4 times so far from this level. You need to be watching. Needs to be on the top of your list. Very interesting. Amazon, also very interesting where you're at going into earnings. That massive level of 127.5. A lot of bounces here, a lot of great reactions, but you need to be watching it because, again, if you could hold this, you're probably going to push back above the 200 daily moving average or the weekly. Yeah, the 200 weekly, which you've rejected off of. It was our target from way down here at 118. You hit it like 134, 132, and that's where you're at now. Okay. Now, a little bit further, a little bit, a few more things we need to talk about. Okay. A downside watch. Netflix. Okay. This is my biggest downside watch that there is right now. Netflix, the head and shoulders here is pretty disgusting. And I know people are like, well, Tyler, this is a bearish chart. Yes. Right. Again, not being biased. If I see opportunity, I'm going to talk about it. Shoulder, shoulder, head. Okay. If you start to break back below the 200 SMA on the weekly around 412, I think there's a clear-cut downside into around 375. The daily 200 SMA, or actually the daily 200 SMA it's a little bit further down. It's like 340, which makes more logical sense. Things could get really ugly. But I'd probably be targeting 379 first and then a little bit deeper as well. There's a lot of gaps down here. Definitely want to be checking out and waiting for them, but those could start getting filled as well. Okay, a few little backtracks and things I've been talking about. BABA. So BABA, and people keep asking like, Tyler, where do you get in on this? Where's the opportunity? BABA, keep it like really simple. When you broke above the 200 weekly SMA right here, let me make sure. Want to make really sure. It's the daily. This is the daily right here. This solid blue one right here. Okay, when you broke above, that was your chance to get in down here. This is when we started mentioning it. You ran from $89 into $102. Okay. It's a big move. Now people are like, oh my God, BABA's scary. You're pulling back. That's why I said if you want to hold BABA, you have to have a lot of time. Minimum contracts are for January of the coming year. Okay. But I don't know how there's like lost understanding here. Now those contracts ran up over like 60, 70%. Okay. And they're down a little bit. But again, understand where you're at and have a trade plan. I can only say this so many times. But again, I still like BABA. Still very interesting. But again, when you're looking at smaller caps or mid caps, right? Not the mega caps like, Meta, Tesla, Nvidia, right? Not the biggest companies out there, but still big companies like CrowdStrike, CRM, Palantir, SoFi, whatever you're looking to trade, right? The problem with trading those is you have to understand the risk associated with them. And if you look at what's happening, those names are getting hammered today. They're getting hammered, okay? So that's why I haven't been touching those, because I understand the risk there, but I also understand when is the time to strike. And if I'm going to try to attack those and go long, I want to attack once the Russell breaks out, which we haven't really done yet. And I can only say that so many times. That's the end of the video. If you got anything else, like, subscribe, do what you got to do. If you don't want to, unsubscribe, right? See you tomorrow, guys.